In this video, I wanted to go over the 1 minute scalping strategy that I will be using on all prop firm challenges in 2026. I'm going to show you the time frames that we use to trade, the entry patterns that we are looking for, which sessions it is that I am trading, the profit target that I use, as well as how to manage risk. So let's get into it. So what we are looking at here is Forex Tester Online. Now with this software, what you can do is you can actually do a prop firm challenge. So that will take into consideration spreads, it'll take into consideration daily drawdown, max overall, and you can really simulate that prop firm environment that you have when you are trading a challenge. So if we start a new prop firm challenge here, we can see that we can use instant funding, or we can just use a custom challenge of our own. But if we were to do an instant funding challenge, then ask you what size account you'd like to use. So we'll just do 5,000 for this example. Do Great British Pound, US dollar. That's the main pair that I like to trade. Start date will be February. I've already back tested January. So if we start in February, and if we start from the 1st, and then we'll give ourselves a month to try and pass this challenge. So let's do end date of 28th of February. Now we can see our targets here. Our account balance is $5,000. The minimum trading days is 3. Profit target of 10% with instant funding. Max daily loss of 3%, so $150. Max total loss of 8%, so $400. And the leverage is 1 to 100. Time zone will be UTC. And then daylight saving time, I will say European daylight saving time. So we have created the project now. So let me show you the scalping strategy that I will be using in 2026. So the first thing I always do is I always put the layout into split screen view, and I have the hourly chart on the left and then the 1 minute chart on the right. And all I'm looking at is how the hourly candle is closed in order to take a trade on the 1 minute chart. It's as simple as that. So if we have a bullish hourly candle, I will be looking for buys during the next hourly candle. If we have a bearish hourly candle, I will be looking for sells. There are a couple of nuances to that, which we will get into in a minute. But ultimately, that 1 hourly candle is all we need to take a trade. So if we just skip forward here to my trading sessions, which for me is 6 a.m. UK time, and I have a look at how the previous hourly candle is closed. So we can see here from 5 till 6, we do have this bullish candle. So because we've got this bullish candle, I am looking on the 1 minute chart for signs that price may continue bullish. Now, even though we are looking to buy, I'm actually looking for price to start showing bearish momentum, because that just gives sellers an opportunity to try and push the candle down, as opposed to just buying higher highs and higher lows, where sellers haven't really had an opportunity to step into the market yet and push price down. So by giving sellers an opportunity to push price down, if they're unable to do so, if price isn't going to go down, it's probably going to go up. Obviously, it could go sideways as well, but a lot of the time, if it doesn't go down, it goes up. So if we look here on the 1 minute chart, that the 6 a.m. candle opens here, and we can see what's happened. We have actually violated this previous low. So we're making higher highs and higher lows. We make this low, and then instead of price continuing up, it then violates this previous low. So I do see this as sellers having an opportunity to push price down, because if sellers are strong enough, what's going to happen is they're going to make this low, price comes back up, and then instead of making a new lower low, if we get that shift where price has made a low and then failed to break the low, if we can then break a high, I see that as price action shifting back into our direction. Now, this isn't the cleanest example. However, what I'm trying to do here in 2026 is I'm trying to take a lot more of these trades where I see. I'm not trying to overanalyze. I'm just looking at objectively, prices push bearish. Even though it's only a small push, I like to see it a bit more clear than that. But ultimately, we do have this break of the low. We have to consider that as bearish price action. Sellers are unable to push price down. I do see that as a shift back into our direction. We've got plenty of room on the hourly chart for price to continue back up here. So when I'm getting into a buy trade, I want to see price just flipping into our direction. So when the 6 o'clock candle opened, which is here, price did actually push down initially to create this wick, which also created the wick on the hourly chart. So we do have this wick where price has tried to push down. If it's unable to do so, and it breaks a high, I would have to be looking for a buy here, even though this isn't my favorite trade. Now, one thing that's important to me is the current hourly candle is in my direction when I take that trade. So if I'm looking to buy, I have to see the current hourly candle be bullish at the time of entry. And if I'm looking to sell, I'm looking for the current hourly candle to be bearish. So I would take this trade here. If we can break above that high, stop loss, we can go 2.5 pips. We can go below this wick that it has created. I usually have a minimum of 2.5 pips and an absolute maximum of say around 10. However, less and less times now I am getting into trades where we have a max stop loss of 10, simply because what I'm looking to do is I'm looking for price to go double the size of the stop loss. So this is a 2.5 pip stop loss here, and I'm going for a 1 to 2. So we need to be able to get at least 5 pips out of the current hourly candle that we are trading, because what I like to do is I like to be in and out of 1 hourly candle ideally. So if we can see that on average price is pushing at least 5 pips, we can have a 2.5 pip stop loss. But more and more I find that price isn't necessarily pushing 20 pips, depending on what time of year it is, depending on how much volume is in the market. But if we have a stop loss of 10 pips, we have to try and get 20 pips out of an hourly candle, which, like I say, is sometimes less likely depending on market volatility. But 2.5 pips is fine. So we're going to place an order here. It's going to be a market execution, 1% risk, and we are going to buy it there. And then we'll skip forward to see what happens with this one. So we would be break even there. So what happens is at 1.5 risk to reward, I like to go break even. And we can see that we clearly went to 1.5, nearly hit take profit, but not quite. So move stop loss to break even at 1.5 and then see what happens with this one. Price comes back down, and then that is a break even trade. So what I'm going to do is I'm going to back test the rest of February, and then I will go over hopefully some clearer examples than that. Okay, so that is February back tested. We'll go over the account analytics in a minute. I just wanted to show you some more example trades because there was some nicer opportunities than that first one at the start of the month. So here is a sell example. We can see that from 11 till 12, we have this bearish candle. So what I like to do is I like to trade the 6 a.m. candle open, 7 a.m., 8 a.m. I then don't trade at all until 12. And then I'll trade the 12 p.m., 1 p.m., 2 p.m., sometimes 3 p.m., depending on news and those types of things. So we can see here that this was a 12 p.m. candle. So from 11 till 12, we have this really nice bearish candle where we've got this top wick rejection from an area where we have rejected from before on the hourly chart. So after this bearish candle, I did think that price had room to at least go break even. So I decided to get into this sell opportunity. Now we can see what's happened. Price been making lower lows and lower highs, then made this lower high. It then violated that previous lower high, showing that bullish momentum. The 12 p.m. candle opens here. Price creates the top wick, tries to push further, fails. So we get that shift of a new lower high. If we look on the line chart, you should be able to see that a little bit easier. So we make this low, we come back up to make a new lower high. We then make a new higher low, showing that bullish momentum. We then make a new higher high, fail to break above that high, shift, and then break a low. So we make that new lower high shift, and then once we break the low, we are able to get into that trade. So there's the lower high shift there. Once we break that low, you can see that price pushes down and we do get that 1 to 2. Now here's an example of a losing trade. What I was trying to do here is I was trying to outsmart the markets, and I definitely should have just gone with continuations. So we'll look at it as continuation trades where we are trading in the same direction as the previous hourly candle. And then there are reversal trades as well, where if price is pushing into an area of rejection, or if we have pushed a massive amount on the previous hourly candle, then I may potentially look for a reversal. And that's exactly what I looked for here. Now I think the main reason I took this trade is from a 1 minute perspective. This is a really nice lower high shift. So I can see that the previous hourly candle has closed bullish. I did see this level here as an area where we may reject from. So I was actually looking to take a sell here after we have this bullish candle close from 7 till 8. Shouldn't have done this one. This is just an example of some of the losing trades that I take, but I should have just stuck with the theory of previous hourly candle is bullish, we should be looking for buys. But I just saw this area where price has pushed into previously and rejected. We also have a slight top wick on the previous hourly candle as well. So I did see this as an opportunity for a sell. As well as that, there's a really nice pattern on the 1 minute. So if we look here, the 8 till 9 candle opens here. And the way I was looking at this is price is pushing up, we're getting higher highs and higher lows. We make this high here, we come down to make a new higher low. Then instead of violating the previous high, we shift to make a new lower high. So if we look again on the line chart, we should be able to see that. Here's the high, we come down to make that low, we then make a new lower high. So then I thought, once we've made this lower high, that's a potential shift in momentum. And like I say, I see this area as an area of rejection on the hourly chart. So once we got that momentum shift from there to there, I was looking for a sell once we broke below this low. So we come down to make this new higher low. We make a new lower high, shift to break that previous low. So I took the sell from there, and you can see within 1 minute, price flew up and stopped me out of that trade. That is going to happen a lot. The win rate, we'll go over the win rate in a minute, but I think it was around 60% for this session. But because we are going for a 1 to 2, obviously there are spreads and commissions. However, ultimately it can be profitable because we are going for a 1 to 2 on every trade. Now, one thing I do is if price pushes in the same direction for 3 consecutive hourly candles, I won't be looking for any more continuations. I'm usually looking for a reversal depending on what the hourly chart is looking like and if we get a nice entry on the 1 minute. So this is an example of a reversal trade that did work, because if we look here from 3 till 4 we closed bearish, from 4 till 5 we closed bearish, then from 5 till 6 that is our 3rd consecutive candle. This candle has got a bottom wick on it as well, so I did see the opportunity for a reversal here because we have had those 3 consecutive candles, and we can see from a 1 minute perspective we start to make lower lows and lower highs. Again, if we go to the line chart, it'll be easier to see, but the more you trade this way, the more you see this pattern without having to go to the line chart. But we can see here lower lows and lower highs, but then we actually shift to make a new higher low. So there is that shift from there to there. Once we've made these lower lows and lower highs, we shift and then we break that high. Like I say, I'm looking for reversals, and by the time we break this high, we are bullish on the current hourly candle that we are trading. So lower lows, lower highs, then we shift to make a new higher low and break the previous high. So that's why I took that as a reversal trade. I then took another buy straight after that because we can see that we do close bullish from 6 till 7. So when the 7 till 8 candle opens, we can see that we start to make these lower lows and lower highs again. Really nice pattern from a 1 minute perspective, because once we make this low, we're unable to violate that low, so we come up to make a new lower high. And then instead of violating that previous low, we actually get that shift where price fails to continue down any further. We're currently bullish on the hourly candle that we are trading. That's why the entry is here. We waited for the current hourly candle to be bullish, and price continues up. And then it took a reversal trade based on that. So even though we've only had 2 bullish candles, I did see this candle as overextended. We can see the size of this bullish candle, so I didn't want to take a buy after that, because even though we've only had 2 bullish candles, if a candle's this big, I won't be looking to buy after it, because I feel like price has already pushed a huge amount of pips. It's less likely that price is going to continue in the same direction. So I was looking for a sell trade here. We see what happens at 8 AM. Price makes higher highs and higher lows. It then shifts to make this new lower high. So once we break this low, we are bearish on the current hourly candle that we are trading. Price continued down, and then that was a winning trade as well. So if price pushes a lot during 1 hour, I won't be looking for continuations. If price pushes more than 3 consecutive candles, I won't be looking for continuations. And if price is pushing into an area of rejection, I also won't be looking for continuations. All of the other times, I am looking for price to continue in the same direction. So if we're not anywhere near an area of rejection, if we've not pushed too much during 1 hourly candle, and if we've not pushed for more than 3 hourly candles in the same direction, that is when I am looking to take continuations. The times I'm taking reversals is the opposite of those things. So if we've pushed more than 3 consecutive candles, I'll potentially be looking for a reversal. But if we've pushed into an area of rejection, like here, I'm definitely looking for a reversal, especially if the candle is this big, because the other rule is if we've pushed that amount, I'm definitely looking for a reversal. So this is a prime example here. Actually, I don't think this is my trading hours, that's why I didn't take this. But if we look here, we can see that price has rejected from this level previously. We've also got 3 consecutive candles in the same direction. Not only that, but the 3rd candle is absolutely huge. So from there, if this was my trading hours, it's not as 10 PM, but I would absolutely be looking for a reversal sell here. So if we go to the account analytics, what we can see here on Forex Tester Online is all of the information that you need to know for your strategy. It'll give you suggestions on how to potentially improve your strategy based off the backtesting session. So here, for instance, it says that we could potentially improve our profit by doubling the position size after 2 consecutive wins until the next loss. Obviously it says this does significantly increase risk, so what we can do with these suggestions is we could take this one, for instance, make a note of what it's suggesting, and then from there we can do another backtesting session where we use these suggestions to hopefully improve our trading. So that's a really handy feature to have here on Forex Tester Online. But we can see that we did take 20 trades overall, 60% win rate, 40% of the trades were short, 60% were long. Breakdown by signal, obviously we were just trading at GU. That is the main pair I like to trade. I do trade GJ as well as USD JPY sometimes, but the main pair is GU, simply because we took 20 trades here in 1 month, and for me that is quite a lot of trades anyway. I don't feel the need to be trading more than 1 pair. So even though it is a simple trading strategy, because I'm looking at so much information on the 1 hour chart, I'm looking for entry patterns on a 1 minute, I find that doing that across multiple pairs is quite hard to do. The only other time I would potentially look for trading something else is if we are just moving sideways on the 1 hour chart and there's no entry opportunities really from a 1 hour perspective. At that point I may look at another pair, but I only really trade that other pair if there's something glaringly obvious. So if there's a clear continuation trade opportunity or a clear reversal trade opportunity on USD JPY, I may take that if there's nothing setting up on GU. So I'll give you your breakdown by session. I'll give you a breakdown on the calendar as well. So I really hope that makes sense. If you do have any questions at all, please let me know in the comments, and thanks very much for watching.